The U.S. approves the measure to begin the 1 hour debate on the debt ceiling bill ahead of an evening vote on passage. All right, that's good. We're getting more progress on that debt ceiling issue stuff. All right, but guess what? We got to look at it from a price action perspective as well. As important as fundamental is, when the market goes up or go down, we got to know what it looks like on the chart to know the triggers either to go short or go long. So that's what Uncle Charters is going to do and help us with in today's video. All right, as far as how I traded today, I wrote here on my Discord, 418.2 is first support with 417.5 below. 420 is first resistance. Watch for the first or second setup before entering. So basically, I was looking for either the breakdown of 418.2 to go short or the breakout of 420 to go long. And you see here on today's price action, look like a cup and handle that we got formed here on the 15-minute chart. But, we broke down 418.2, finally got that close below 418.2 on the 15-minute chart. That's when I alerted to the group. Got the breakdown of 418.2, put in 417.5 in play, then 416-ish below. That, that trade worked out pretty well. And it was, I think I mentioned to you guys, below 418.2, that was a Fibonacci level. Look to short below that level. And the morning started off great. We broke down the level, broke down 417.5. That's the orange line. And we got pretty close to my 416 level. We got to 416-ish before we started getting a bounce. And then here you guys see we recaptured 417.5. We don't want to call bottoms. We want to try to, catch false breakdowns because we don't know if this was going to be a dead cat bounce or what. But it ended up recapturing 417.5 and triggered a move going as high as 419-ish, a little higher than that. And then, that's pretty much it. We did close, though, below 418.2 end of day, below that fib level. So we lost a couple of critical support levels. Remember, yesterday we closed above 420, and today we closed below 420 and 418.2. So not quite bullish, at least for the short term. Okay, now here's my 4-hour chart. I want to show you guys the structures and levels that I'm looking at. This triangle pattern, that's where my 417.5 level came from. We broke it down intraday, but just couldn't hold it towards the end of the day. Okay, so you guys can see that purple line, that's 418.2. So we're going to be quite simple about this. Okay, based on this structure, needs to stay above 417.5 to avoid a false breakout setup. Based on this triangle pattern, we already lost some support levels, which is good for bears. But for tomorrow, bears want to see below 417.5 and below 416. That was this, pivot low that I had over here. This pivot, not pivot low, pivot high that I had back from Thursday, May 25th. All right. Now we do have a zone, 416, as well as this pink trend line. All right, that's around 415.5. So if 417.5 that fails, that's a false breakout setup of this triangle pattern. We could go test 415.5 to 416 zone. Okay, now this pink trend line started way back in March 13th low, and we had a test here, a test here. False breakdown setup. Okay, this trend line has kept us in an uptrend for quite some time, couple months now. June's tomorrow. All right, so we want to see a breakdown of 415.5. If you're a bear, that is. That's what you want to see. You want to see 417.5 fail. You want to see 415.5 fail to put 414 in play. That's another fib level based on the downtrend from all-time high down to October low. So if 414 fail, you could possibly go back and see 412 is. That's around where this triangle pattern support is. And if that fails, back down to 410 and lower. All right, so to keep it simple, if you're a bear, below 417.5 and 415.5, that's bearish. All right, play it level to level. That's the bear case scenario. Bull case scenario, what bulls want to see is to stay above 417.5 with 415.5 lowest to keep the structures intact, and preferably recapture 418.2. All right, I would long above 418.2 to put 420 and 422 back in play. If SPY decides to break down support, I would follow the price action and short it, but risk management is number one priority. Okay, so you got to watch out for those false breakdown setups. Meaning, if we break down 417.5 and recapture, I would look to long. That worked out decent intraday today. If we break down 416 or 415.5 zone and then recapture it on the 15 to 30 minute chart, I would look to long as well. Okay, so watch out for those false breakdown setups. All right, so quite simple. Bull case scenario, 418.2 overall. It needs to recapture to trigger more upside. Okay, we're like, if we test 422 again, it's a good chance, unless we get a double top, there's a good chance we get a higher high, tested 423.5 and 425. All right, but 418.2 needs to recapture. That'll give us a false breakdown setup. All right, watch the setups, follow the price action, guys. As far as triple Q goes, I do want to use some smart money concept with you guys. This white trend line, that's the 61.8 fib level, 349.7-ish. Could not hold as support. We cleared it yesterday, could not hold. That is a false breakout setup. We also closed below the 348 support level that I have, okay? So you guys see this big green trend line, all right? Mostly dominated by buy orders. That means there is an area of imbalance. If you look to the left, look to the right of this candle right here, there's no wicks or anything. So usually the market likes to balance itself out, all right? When certain areas have too much buy orders, they like to fill it with sell orders to balance it out. So we identify that area. I'll do it like this, okay? Now, usually some people consider the area of imbalance filled when 50% of it gets filled. But obviously, if 100% of it gets filled, that's even better. But the 50% mark on it is around 344. And then the bottom of it is around 344, 341.4. Okay, so we'll use those as support levels. So if 346.5, that's a support level right now. If that fail, my targets would be 344 and 341.4-ish. Okay, below that, the area of imbalance would obviously be filled. But if it fails, then we could definitely go down lower with 339. All right, 339 is a previous pivot high around here. Okay, we had a battle around 339, green line right here, which gave us this breakout, this nice breakout. All right, so below 341.4, watch out for 339. And my multi-year trend line is still at 336. Okay, that's the bear case. Look to short below 346.5. Now, if you're a bull, you want to see the levels lost today recapture, starting with 348, 349.7, 351, and maybe we can go back and test 354. All right, let's keep this simple. 348 recapture, look to long. 346.5 fail, look to short with the targets that I mentioned below. IWM, I mentioned if we lose 175 again, we're most likely going to test that 172 to 172.5 zone. We did, but once again, we got to bounce there, okay? Let's see, it looks like a double bottom, but we'll need to see 175 recapture for this double bottom setup to mean anything, all right? Look to long above 175 to put 177.5 and 180-ish back in play. All right, if we go back and test 172 zone, it has a lot less buy orders there. All right, we absorbed a lot of it today, so that support zone should be weaker and could give us a chance to break it down, which would put 170 and 167.4 in play. Had some beautiful trade on Tesla today. All right, look at this bounce off that 195 level. Beautiful trade, guys. Beautiful trade. Alerted in the group. Yeah, got a bounce. Initially, it broke down. It opened above the 200 daily moving average. Initially, it broke down, which was a very nice trade to back test this breakout level here at 195. Good level to level style move intraday. But once we got the bounce and it recaptured some resistant levels, all right, because at 195, 197 was resistant with the 200 daily moving average at 199.3-ish. Recaptured those levels and managed to close at 203.93, just under my 204 level. So for tomorrow, now that we got the back test, a successful back test of this bull flag, and it, we got the bounce, that's bullish. Look to long above 204 tomorrow, as long as above the 200 daily moving average. Above 204 puts 207, 210 to 211 zone, 214 and 217-ish in play. All right, look to long above 204. Look to short. If we break back below that 200 daily moving average, which is at 199.3, it could change tomorrow. Look to short with 195 back in play. Below 195 would be a false breakout of this bull flag, and that is when I would turn back to bear bias, favoring 190.3 testing with 187 and 185 below. All right, Apple. Looks like a potential double top around that 179 level, okay? For it to mean anything, we need to see it break down 176.4. If it breaks down 176.4, that would put this multi-month trend line that's kept Apple in an uptrend all year. All right, 173.4 would be in play. Below 173.4 is when bears would take over. But we'll need to see follow through. Watch out for false breakdowns, okay? Below 173.4 would put 170.3 in play and gap fill at 166s. All right? To cancel this double top, obviously, Apple needs to clear 179 to put 183 in play. All right? Now, let's take a look at the DXY. It managed to close back above that 23.6 fib level. That's technically bullish. Let's see if it can show follow through. 104.7, that was today's high. I'd like to see it clear that level to put 106.1 in play. If it breaks back below 104.1, it's less likely to recapture and more likely to drop back down to 103.4 with 102.5 below. VIX isn't doing much. All right, VIX isn't doing much. Managed to bounce off that 17 support level. If that fails, 16 would be back in play, but not doing much, nothing worth noting. As I usually say, it needs to capture 18.5, 19, and 20 to be bullish, but that's not what it's doing. Just a lot of chop. All right. Here is the dog pool. I need to sign back in here. Dog pool for the SPY, 5.5 billion. Holy moly, came in at that 420 level. Seeing a lot of activity. Even in the previous day, we saw billions of premium at that 420 level, okay? 420.17. So, yeah, definitely watch out for the 420 level. As long as below it's bearish, but if it can recapture, obviously that would be bullish, all right? Now, let's take a look at the option flow. SPY filter for 500K premiums or above. 87% in the puts. Yeah, the flow's been bearish all year long so far this year, but not as accurate as it was in 2022. This is why I say price action is the king. But something I like to use the flows for, I like to look at the spot, and the spot is usually tell me where the entry is around at. So I like to look, especially the big orders one, to see where if it's close to my support levels and stuff. Like this one, 417.3, pretty close to my 417.5 level. All right, so that's good to see. All right, overall bearish. Triple Q, 89% in the puts. Can we finally pull back, like a bigger pullback on the triple Q? All right, let's see. Not much. Look at the contract numbers though. Not much activity overall. That's interesting. IWM all inputs, over 20,000 contracts, all inputs, 166 strike price, June 16th. They entered around 173.76, over 10,000 in size. That's pretty bearish to me. Tesla, 63% in the puts. Good mixture of sweeps and block orders. This split order though is interesting. Over 250.6 million in premium over 10,000 size 450 strike price January 19, 2024. It's a split order, not a very urgent or aggressive order, but it looked like a hedge right there. Now look at Apple, 53% in the calls. Overall bullish on Apple. Interested. And the VIX. Nothing. Nobody traded the VIX. Alright? Thank you guys so much for watching. If you guys are looking for trade ideas, a supportive community, definitely consider joining Uncle's Discord. But other than that, thank you guys so much for watching. Have a great evening. Peace.